is prepared which is prepared to know the financial result for a certain period and financial position on a certain date. So this is the definition. Now, financial statement is a statement which is prepared to know the financial result for a certain period and financial position on a certain date. Okay. So what is the meaning of financial statement? First of all, it is a statement. So we cannot say it is an account. Okay. Financial statement is a statement. Okay. Now, in financial statement, we do two things. First is to know the financial result and to ascertain the financial position. Financial result is related to certain period. That's why I have written to know the financial result for a certain period. And financial position is related to a date. That's why financial position on a certain date. Okay. So
Okay,
financial position keep changing. What?
Nothing, sir.
Okay. So financial position keep changing with the date because I told you in previous class that if we have some money today, then maybe there will be increase or decrease in the next day or after 5 days, it will change. Maybe the amount will increase or decrease. So this is why our financial position is always related to a certain date. Okay.
Okay, sir.
Now, first of all, it is a statement. Features, characteristics. It is a statement. It shows the financial result or simple result of business. So financial result for a certain period. And the second is it ascertain the financial position on a certain date. The next point is it is prepared on a certain date. Means on which date it is prepared, it based on the time frame that we are preparing it for, the objective that we are preparing it for. Like uh, generally, if we want to know the profit or loss or financial position of the business, then we prepare our financial statement at the end of the year. Okay. Sometime we prepare it at the end of every quarter, at the end of half year. So we prepare our financial statement on different date, but it is certain that when some period end, then we prepare the financial statement like quarter ended or half year ended or year ended. So whenever a certain period ends, then we prepare the financial statement. Now, the fifth point. So it is a historical document, means it always show the result related to past, the transactions, the items related to past. So historical document. Next is it provide important information. For example, profitability, solvency, and the last one, it helps in decision making. So these are the features of financial statement. Okay, so this is the definition and the feature. Please write these two. After that, we will discuss a topic.
Okay, sir. I finished writing.
Okay. Now, if you remember, we have discussed the users of accounting information.
Huh?
Yes, users of accounting information.
Hmm?
You don't remember?
No, sir.
Okay. So, users of accounting information or financial information, you can say. So, these are also the users of financial statement. Financial statements. So, here it is divided into two parts, internal users and external users. So there are two types of users here. In internal users, there is owner, and second is management, and the third is employees. So all these person wants to know the profit or loss or financial position of the business. Now, the question is why they want to know this. So, owner is investing his money into the business. That's why he wants to know the profit or loss or financial position of the business. Management is uh, working for the benefit of company and its employees, obviously. So he also wants to know the financial position and the profit or loss of the business, so he can do take future decisions for the benefit of the company. The third is employees. Employee get salary and other benefits from the company, and they work for the company. So if there is any uh, profit or loss in the business, then uh, they want to know, because their salary and wages or remuneration depends on it. If company is in good position, then they want to increase their salary. If the company is not in good position, then they will not demand for increase, like this in this situation. So that's why owner, management and employees wants to know the financial position and financial performance of the company. Now, who are the external users? So in external users, the first is banks and financial institutions. So we take loan from these institutions, these banks. So they also wants to know that how we are performing in the market. So if our profitability is good, if our solvency means loan repayment capacity, ability. So we are able to repay our loan or not. So these are the reasons that bank and financial institutions want to know the performance and position of our company. The next is investors, the persons who want to invest in our company, and creditors who are giving services and goods to our company on credit basis. Fourth is government and its uh, regulatory bodies and its authority, like taxation authority or SEBI. These authority works for the benefit of government and benefit of public. So like when we invest the money into the company, it is safe or not, it is decided by SEBI. That company is working properly, it is not doing any fraudulent transactions or fraudulent work for misappropriation of the fund of the public. So SEBI keeps the company in check so that they cannot misappropriate. Now, the taxation authority see that if company is making profit, then they are giving proper tax or not. So this will help government to get more taxes from the company and to avoid any misappropriation from the company side. So government and its authority. So these are the external users. Sometimes there is customer or consumers. They also want to know the situation of the company, the profit they are making, the costing patterns like this. So they also wants to know. So these are the internal and external users who wants to know the company position in the market. Okay, so please write this.
Yes. 10, sir.
Okay. Now, financial statement is divided into two parts, which I already told you. The first income statement, the second is position statement. Now, what is income statement? Position statement. So, income statement is prepared to know the profit of the business, and position statement shows the financial position of. Am I audible to you?
Yes, sir.
Okay. So, under income statement that we prepare, trading account and profit and loss. So, we'll discuss what are these trading account and profit and loss account. But for now, you have to know that, sorry, you need to know that income statement includes two parts, trading account and profit and loss. The second is position statement, in which only one statement is prepared, which is balance sheet. Now, what is trading account? So, trading account. It is the first part in financial statement or final account, you can say financial statement, and it is prepared to know the gross profit or gross loss of the business, to know the gross profit or gross loss of the business. Now, what is this gross profit and gross loss of business? So, first of all, to understand this, let's take example. Let's say that you have a business of furniture. You are operating a business of furniture, and you have a showroom, you have a factory, you produce the goods, the furniture, and then send it to showroom and then sell it. Okay, so to produce a furniture, to make a furniture, you have incurred, you have purchased wood of rupees 5,000, and you have incurred on some other material like Fevicol, uh, and some other items. So 1,000. And then to prepare furniture, to make furniture, wages you have paid 2,000. So these are the expenses: 5,000, 1,000, and 2,000, total 8,000. And you sold the furniture, the total furniture you produced in 15,000. So how much profit you have made? You have earned. How much profit you have earned? Yes,
7,000.
7,000. So our profit is 7,000. Now, this is complete profit, or It is not the actual profit.
It is the complete profit. Okay.
It is the actual profit.
Yes.
Okay. So what about these are actually you can see that these are the directly related expenses to the furniture. That's why you understood that these expenses are incurred. But there are some other expenses in business also, like electricity. If you are running a showroom, there will be electricity. There will be staff in showroom also, to whom you pay salary. uh, there may be water expenses, cleaning expenses of showroom, rent of showroom, and there are some local taxes of showroom. In factory also, there will be lighting, and if there is a guard working here, so guard salary and other things in factory also. So these expenses are not deducted from this profit. Yes or no?
Yes.
Yes. So this profit is not complete. Okay. We need to deduct these expenses from this profit also. So this is just one part. Okay. This is just one part. After calculating this profit, you need to deduct these expenses in proportionate basis, because these expenses are not directly related to this furniture. There may be different furnitures that we have produced, and we have to pay, we have to apportion these expenses on the basis of their sale or cost. Okay, we have to make proportionate of these expenses and distribute it between different products. So that's why this profit is not complete. We have to deduct some indirect expenses from this also. Okay.
Okay, sir.
So that's why this profit is called gross profit, means not complete, not actual profit. It is gross profit, means everyone can easily calculate this profit by taking income or the sale price, and we will deduct the direct expenses. Then we will get gross profit. After that, we deduct indirect expenses. So the actual profit is called net profit. We will calculate it by deducting indirect expenses from gross profit. Is this clear to you?
Yes, sir.
So trading account deals with only directly related expenses to the sale, and then we know the gross profit. Means there are certain expenses which is not deducted yet. That's why it is called gross profit. Okay.
Okay, sir.
Okay. So after getting gross profit, you deduct some indirect expenses, and then you get net profit. So this is our first concept, trading account. So we have, okay. So now the features of trading account. Features of trading account. First is, it is first part of final account. First part of final account. The second is it is prepared to calculate gross profit or loss. The third is it is prepared before profit and loss. Or in this line, you can say profit or loss account is prepared on the basis of gross profit calculated in trading account. So this is better line. That's why I'm removing this. Yes. Now the fourth one is uh, only direct expenses is written in trading account. Okay, so these are the features of trading account. Now how it is prepared? So format is seen as okay. So this is particular amount, particular and amount. Now the heading of trading account is trading account of for the year ended. This is debit side and this is credit side. Now, the first item is buy sales. If there is any sales return given in the quotient, then you will deduct it here, sales return. And the final amount will be written outside. Here it starts with opening stock. And the next item is purchase. And you will deduct purchase return here. So purchase return is also called return outward. Return outward. Okay. It is also return outward. and it is called return inward. So these are the items, starting point. There are many items that we have to write here, but before that, please write this.
Finished, sir. I already wrote off.
Yes?
Finished, sir.
Okay. So this is trading account format. Please write these items. After that, actually, there will be a second class starting soon. So please write this, and then we'll discuss the balance part next class.
Yes, sir.
So you have completed this part in your school,
Yes, sir.
and you understood this part.
Only half finished.
Yes?
Only some I understood.
Okay. Please write.
Sir,
Yes, do it.
I'm not able to see it, sir. Finished, sir.